Good morning and welcome to this session, which is part of the week of EdTech 2023. Welcome to this morning's session. While we wait for everybody to join, please do feel free to use the chat to introduce yourselves. We suggest keeping your cameras and mics switched off unless we invite you to turn them on. And you might also want to hide non-video participants so that you get the best view. The session will be recorded and we'll share a copy of the slides after the session. And please do put any questions you have into the chat because we'll have a Q&A session towards the end. We'll just wait for a few minutes for more people to join and then we'll kick off shortly. So good morning again, everybody, and thank you so much for joining us as we kick off with our presentation on preparing for your first EdTech fundraising. I'm Helen Gironi and I'm Director of Ventures here at UFI. And the idea behind the session is essentially that we wanted to share some of what we've learned in the market over the last well, for me, many years of backing early stage businesses. So we just wanted to pass on some of this knowledge and understanding. Looking at the session outline, we're going to cover when and why to raise equity, what sort of stage in a company's development and why you would choose equity over other forms of funding. How to position your business for success, what you can do in preparation to make it a smooth running and successful process, what's going on in the investment market, and what to look out for in an investor. What are the attributes that we think it's worth looking out for, and what are investors looking from you and from an investee company? So this slide really covers what is equity finance. Venture capital, so this is typically provided to the earliest stages of businesses, but businesses that are growing quickly or have the ambition to grow quickly. So high potential businesses that are interested, that want to scale up quickly and provide their investors with a capital return. So investing to earn a return for their investors through an IPO or trade sale in the company. And venture capital is different from other forms of financing in the following ways. So private equity is generally later stage equity funding, so after venture capital, and it's with a focus on more established businesses, so businesses that have a group of very established customers and they've not only sold to them in small quantities, but they've managed to sell large contract sizes to those companies and, possibly looking at other geographical locations, so expanding beyond the UK as well. Another form of financing, debt financing. So this is essentially borrowed money. It doesn't dilute the ownership of the founders that the founders have in the business. So, and there are fewer sort of issues of giving up control. There are various controls that the debt providers will want, such as the ability of the company to take on further debt. But these are generally less onerous, essentially, than if you're raising equity funding. Obviously, the business needs to make regular interest and principal payments, so paying back what was borrowed plus interest as well. And that can be fixed or floating rate, for example, or you could link it to the revenue of the business through a revenue participation agreement. Invoice financing, that's another form of finance. So borrowing against the invoice sales. So once a company starts to scale, this can be quite a useful form of being able to deliver on those quickly growing, on that quickly growing book of contracts. Grant funding, so no repayment typically, interest or ownership, and usually attributed to a particular project or target. But there are legal obligations. So, for example, clawback clauses, taking a charge on assets funded by the grant, and a commitment to, for example, share information, share learnings, that kind of thing, although they do very much vary from grant funder to grant funder. So is venture capital right for me, for your business at your stage or in the future? Is it something that you should be considering? Venture capital investment has many benefits, but also comes with challenges. So it is, in terms of the benefits, it is long-term capital, typically doesn't need repaying as early as debt funding, and so can take the business through various stages of growth before the capital needs to be repaid. There's an alignment of interests. So venture capital investors want to grow the business and want to see an increase in the value of their shares. So very much aligned with the targets of the shareholders and founders in particular, generally, although, you know, not all businesses want to grow at the same rate of growth as the investors want. This is capital for growth. So it can be used across the company, wherever the company needs to fund, for example, new team members, working capital to deliver on contracts, investment in the IP, in the technology that a business is developing. There are fewer restrictions over what the capital can be used for compared to, for example, grant funding or debt finance. Generally, a business gets to benefit from the expertise and guidance of venture capital investors. The venture capital investor generally wants to get involved, not in the day-to-day running of the business, but enough to be able to hand on any expertise and guidance to the team that will help the team and will help the business be successful. And the last point, validation and credibility. This provides both customers and other potential funders with that stamp of approval, really, that somebody has seen the potential of the business, likes the product enough, and thinks that the quality of the product and delivery is of a certain standard. So it can help when the business is dealing with lots of different stakeholders. On the downside, the founders, the shareholders, will get diluted by venture capital funding, by equity funding generally. And so that is something that needs to be taken into consideration. Obviously, the higher valuation you can achieve when you are securing equity funding, the lower that dilution will be. And so, you know, when we invest in businesses, we look at the shareholding that founders have to make sure that they still have enough of a share of the business to be properly incentivized and to really want to take the business in the same direction as the investors. It is a time-consuming process. Equity investors, venture capital investors will require a certain amount of work that the company, both the company and legal advisors and the investor undertakes. There are varying degrees of how time-consuming this is, but all institutional investors will require quite a bit of process work, essentially. There are high barriers to funding, so a company will need to show that it has huge potential, essentially, to grow, to fight off the competition, to enter new markets, and to win customers over. And it is quite a challenge. there will be some loss of control. So equity funders coming into a business will want certain control mechanisms in place. So, for example, the amount of debt funding that can be taken on by the company, the amount of money that's spent on salaries, or the levels of salaries within a company are two examples. But this is pretty universal, really, across venture capital investors. They all do seem to require it. So just looking at the equity funding ladder, the various stages of rounds of fundraising. So it really typically starts with friends and family funding, funding from angels and grant providers. And this is often before a company has, or with grant funding, even a minimum viable product. It obviously varies. But it is possible to get funding without having a finished product and paying customers. And we've just listed a few of the providers at the various stages. So Innovate UK provides a lot of grant funding at this stage. They are prolific and a great source of capital to many companies at this stage. GC Angels, for example, and 24 Haymarket are angel groups. The pre-seed stage, this is sometimes institutionally led, although this is often still angel capital and angels leading these rounds. Typically, you see a viable product, a product that can be sold, and for the company to have identified a clear gap in the market and a pain point for its clients and potential clients. At the seed stage, this is more usually the first institutional round. The proof of concept has been validated with customers. So, customers that are using the product and customers that, the funder can talk to understand their perception, why they've bought the product, what they think about it. So early market traction demonstrated. And Emerge and Bright Eye Ventures are two funds within the EdTech space that are active in this area, along with Ufi Ventures. Series A, by this point, the business model is typically proven. So there's a lot of, I think, pivoting and flexibility in business models around the pre-seed stage and the seed stage. So a lot of iterating, testing the market, testing pricing models, for example, and routes into the market. By Series A, investors expect those to have sort of the testing to be reducing and proof that the business model works, with metrics showing potential and trending upwards. So, growth in clients, growth in contract sizes, for example, eyes on markets outside of the UK, expansion opportunities, and really a building sense that this company is valuable and could be sold on in a trade sale or IPO later on. So coming to the next slide, positioning yourself for success. What can you do to make the process of securing venture capital funding easy or as smooth running as it can possibly be? So there's no right time to fundraise. It is always going to be a bit of a heavy lift, but we think absolutely worth it. And I think the first institutional round really does pave the way for future success and future rounds. So a lot of the practices and processes that a company will go through, for example, setting up a data room and what to populate that data room with, will provide the backbone for future fundraisings and also learnings for the founding team. They will understand better the next time they fundraise what needs to be done and what certain investors are looking for, and how to make the funding round more smooth running. So I'd say one of the most important things is to understand the problem and the opportunity. So many investor questions will come back to validating that point. Why will clients buy your product or service? Why will they not buy the competition? and how to grow within a customer. How many sort of users are they looking to roll out that product to? So have you validated your idea? Do you have customers that show that there is a need for the product? Can you articulate that concisely? If you caught an elevator, a lift with a potential investor and had literally 60 seconds to talk to them about your opportunity, can you catch their attention? Can you explain it in 60 seconds? That's often a key test for investors. Do you have a clear go-to-market plan? Do you know how to reach your potential customers? How are you going to target them? How expensive is that going to be? In particular, investors always look at the lifetime contract value that you're targeting versus how much it costs to reach each customer as a key metric when they're looking at businesses. And is that scalable? Okay, so you can reach 3 customers and you can deliver a service or contract to them, but what are you putting in place? What are you envisaging putting in place to make sure that when you scale that up, many times the product is still good quality and not too inexpensive to provide to the market? Building a winning team. Who is it that the investor is backing? How do you all relate to each other? What's the chemistry like within the team? What roles do each of the team members have? And what are the gaps? And what are you going to do about filling those gaps? Most investors don't expect the team to be absolutely fully developed and to have to tick all the boxes, but they certainly want to know that you're aware of the weaknesses within the team and what you're doing to fill those gaps, or what you envisage doing about that in the future. So be prepared for the process. Do you have a business plan, a pitch deck? The better quality it is, I think the fewer questions your investors will come back with and the smoother the process will be. It's really worth putting time into that part of the process. And have you researched your ideal investors? Do you know enough about them and why they will look to invest in your business? So coming on to the next slide, I'm going to hand over to my colleague, Ella Said, to talk us through these slides.
Hi. I'll jump in here, NSA, on these next couple of slides, if that's okay. And then you can come to the trend ones. That's fine.
Yeah.
Oh, sorry.
Sorry, I've had a slight bit of issue with my audio, but Alex, I think you were asking me that if I would take these slides.
If you're happy to, that would be great. Yeah.
Yeah. Apologies for that. And if you don't hear me, can someone stick something in the chat? But basically, yeah, great. So just to follow on from, I think, what we want to see in an investment. One of the big headline items over the past year has been that we've actually seen a massive, quite a significant drop in the number of seed investment and fundraising in the UK in the past years. You'll see this graph shows that there's been less and less money deployed into EdTech and HR tech, which are the two kind of key themes and key areas that we invest into. However, that isn't necessarily the negative picture that you may think it is. We do expect to see investment activity pick up in 2024. There are funds like ours, and Alex will speak about that later, that are still deploying. And actually, some of this market activity has been because many companies have decided that actually, rather than fundraising now in 2023, which had been a difficult year, they're going to just reduce their cash burn and reduce what they spend each month in order to essentially then raise when they've got a bit more traction in 2024 and when they think the market will pick up. Meaning some of this drop in investment is not actually driven by funds saying they don't want to invest, though some of it is. Some of it's also driven by companies saying, actually, we want to just eke out the cash we've got and keep going until 2024. However, we do want, I think it would be interesting to see how next year goes, and also how that affects the kind of companies we see. And I'm going to come and speak on the trends that we're seeing and what we hope to see and want to invest in the next year or so. But and also the other graph that's here is just to show you about the stage of companies that have received investment. There's been a lot of venture investment. The majority here are seed and venture stage investments, but there are a whole range of other companies in the space. But they do show that some companies don't make it to the next stage, but also there's a lot of funding that still goes into growth and established companies, and there's a significant amount of exits, mostly to M&A at the moment, because we haven't had an IPO for about 2 years now. I guess then before we talk about trends, I just want to move on to what you would look for in an EdTech investor. So the first thing is, and again, Alex will speak a bit more about who we are, but always make sure that the conversation is a two-way conversation. So if you're going to look for an investor, make sure the investor fits the priorities you want. Will they provide you valuable guidance? EdTech sector knowledge, previous startup experience, help with an exit, all the things that you will need as you go on your journey, and also that you will want from someone who owns part of your company and to be part of that journey with you. Secondly, also think about, what do you want from that partner? Do they have any other aims than a financial return? Have they achieved any exits yet? How can they help you, and how do they align with your mission? So for example, we're an impact-led fund, and I think we get a lot of people who are both mission and financially driven, and we really, I think, help those who have a similar mentality to ours around the commercial viability and the strong impact lens. Again, similarly, kind of coming to other questions you might want to ask about yourselves when you're looking for the right investor for you. We've had looked in, like, for example, what is their investment time horizon? For example, do you want to invest loads of time in many conversations with a fund that will only, be with you for one round? What about thinking about, do I use that time more strategically and looking for an investor who will be with me for multiple rounds? So for example, can they invest 25k now, 50 to 100k next time, and 500k or more in the next rounds, or however they structure their time? Will they be with you for the long haul? And I think we often think that mission alignment and ability to fund over multiple rounds is really a strong indicator of a good partner that you might want to look for in an EdTech investor, because it's obviously a bumpy journey running a startup to scale up. And then then other questions are, for example, have they invested in the EdTech market previously? Do you want a sector-specific fund or a generalist fund? Can they support you in scaling in a particular sector, or will they provide you with intros to a range of different sectors? And do you want, again, it's that balance between generalist fund versus specialist. And similarly, what's the reputation of the fund? Have you spoken to other of their portfolio companies? Would their portfolio companies, for example, recommend them? There's a great website called landscape.vc, which it has a lot of sort of very unbiased and anonymous reviews about different VCs. But also, I think it's great to get in touch with portfolio companies within a VC's portfolio directly. You can see who those are on their website, and just ask them, how they found working with their investor. And similarly, you can also ask all these questions to your investor directly, and I think that will show that you've had a maturity of understanding of why you want that fund and not just any money that you can get from the market. And I think that will provide some really good and valuable conversations. So somewhat moving into then the section about what trends are we seeing. So I want to share with you a bit about, what are we seeing in the market? What do we expect to see in the next 6 months? And what are kind of future trends that we'd like to pick up and see more companies building solutions in. I think one of the things that is really interesting here is that if you are building in this space or any of these spaces, we'd love to hear from you. But if you're not and you think there are other trends that we should be looking more at, also please get in touch, because we're actively deploying, and we would, and we love to continue to speak with companies building in our space. And one of the things that I was really encouraged by is, I think it's Timo put in the chat that they are currently only a hardware EdTech business. And to get a comment like that even 6 months ago would have been exceptionally rare. But we're seeing a big trend and movement in the moment from infrastructure, so from content, so businesses that were creating modules and learning modules, to companies that are building infrastructure. So an example of that would be a company which build a module about racial bias that's delivered via VR, that would be a content business. But now we're seeing companies that are building the infrastructure so that you can build your own VR module. They're not building headsets and they're not building content, but they're building that infrastructure in between so that you are empowered potentially as a corporate or a learning provider, or even an individual, to essentially make your own learning content. And for example, that can include no-code, white-labeled platforms whereby you can get really quickly to doing, for example, short form-based learning. We also, for example, can see AI-generated content or third-party integrated content onto these platforms, whereby if you're, they might build the infrastructure, but they may try and use AI and generative AI to essentially provide the content that they need to deliver their learning. Otherwise, I think we're seeing quite interesting moves in generative AI, but we haven't seen some really compelling solutions yet. So that's because we really see whether we want to assess whether GPT-4, for example, if you're integrated with GPT-4, is that a powerful use case, or is that just a buzzy trend that you're trying to jump on top of? How are you accrediting what, the learning and the content that you get from using generative AI? How do you validate that people know what you've taught them after learning from these types of sources? And how do you think about the pedagogy and learning design when you use this type of AI integration? We're seeing other areas of trends, such as niche targeting, so people going after specific demographics and then growing that, whether that's, going after, specifically targeting Black women's learning needs or the Northeast tech economy's learning needs and scaling that to other parts of the UK, then going global. So it's a sort of winning in a niche and then expanding. And we're also seeing a lot more challenger colleges and unis to provide job-ready courses for people, because they feel that the rest of the learning system is letting them down, and they'd love to provide people with the skills they actually need for work. And I think this is really working in areas that the learning sector isn't catching up, and that's like green skills. So that might bring me to the next sort of slide, which is what we think we'll see in the next 6 months. And one of those is green skills. That's building on the sort of rapid, though early, success of companies in Europe who are essentially providing people with the skills and training to do everything from install solar panels and electric vehicle charging points to, for example, working on novel bioplastics and other areas which are going to become more a part of our economy. So it's providing people with the skills they need for the jobs that are part of this net zero transition. And we expect to see greater industry startup partnerships to be able, that the industry, for example, let's say an offshore wind provider, can get the right people in, and startups also get the exposure that they want from working in the green skills space. We expect to see more in areas such as deskless workers, which again, people who aren't working at laptops but work, for example, driving trucks or in airports, or basically the majority of the global economy. We have deskless workers, and we don't see a lot of provision for that. We did see some come through in 2021-22. We expect to see this come back next year, but with greater range of solutions, applicability to different people's contexts. So again, just basically a more complex and more in-depth set of solutions for this group of workers. And other areas we expect to see things are in more targeting of neurodiversity. So again, we've got a portfolio company called Autonomy, which works in this space, but we've seen more and more interest in that company and in the space broadly. And I think finally, another kind of emerging theme at the moment is what I call multi-integration, but it's where we see scale-ups particularly working with other scale-ups to see how do we provide more solutions to our customers. So for example, cross-selling between a company that does a health tech company and an EdTech company or work tech company, basically cross-selling services to each other to gain greater market share, or where we see new companies planning that they will only build part of their product and then they'll get other areas of their product from other companies. So, increasing their range of third-party integrations. And then finally, there's some future themes which are really early on, but we would love to see more in their space. And we expect them to kind of come in the next year or two. But for example, real-time learning through AR, older workers, for example, more solutions for older workers, or people who want to return to the workforce or reskill later in life. Again, more solutions in the very margin-constrained construction sector, which previously had been really there'd been a lot of need for learning and work solutions, but we haven't seen many because of the margins in the sector and people not willing to pay for them. And again, more work with marginalized groups of different descriptions who need more access to the learning and work systems and more recognition of what they bring to those systems and how we can help them excel. And again, finally, I've touched on this with the niche targeting, but looking at geographical targeting. So people who are saying, let me win in my area. So for me, I'm based in Edinburgh. So let's win in Edinburgh or south of Scotland, then expand to Scotland, then the UK, then global. And we expect to see more of that, especially in line with actually some of the work we're doing at the Challenge Fund. And I think probably the challenge, some of the things that we're looking at UFI bring me nicely to, who we are as UFI. And I think I'll hand over to you, Alex, to speak about that.
Thanks, LSA. That's great. Moving on to a bit more about Ufi Ventures. We are the equity investment arm of Ufi VocTech Trust. We were formed in 2019 and have been investing since. And we have a portfolio of 16 businesses, hoping to grow a portfolio of more than 20. We see ourselves as the expert adult for skills, or skills for adults investor in the UK. That kind of we typically class that as VocTech, but it's essentially adults skills for adults and supporting them into work and thriving in the working environments. We sort of have what kind of investments do we offer? We run a continuous process. You can reach out to us at any point in time. We don't have sort of open times. We are continuously appraising and reviewing new opportunities to invest. As Helen was talking about earlier, in terms of what kind of investment we offer, we invest for equity. So we take an equity stake in every business we invest in, and hopefully in support. Often invest alongside other investors as part of a syndicate. We can't invest on our own. We often invest with others as part of our, and that's to do with the mandate of why UFI do this. It's about encouraging money into the market and encouraging other investment into the VocTech space. We typically invest at a seed stage. So, a lot of the questions I sometimes get back when we say seed stage is, what does that actually mean? We typically look for round sizes of between 500,000 and maybe £2 million, and we will typically invest a first check of around 150,000 into that round. But flexibility is built into the way we operate, so we can flex about that first ticket. And part of our model is around us going on funding journeys with companies. So we will provide further or follow-on investments, so into subsequent funding rounds of up to £1 million in the companies that perform best in our portfolio. And why we're doing this ultimately is that UFI have a wide network of expertise that we can open up to these portfolio businesses. And we don't see ourselves as just an investment. When we invest in companies, we want to go on those journeys with companies and really support them in making the most scalable impact they possibly can. This is ultimately what this is about for us as the team. When we first set this up in 2019, as you do when you set up an investment vehicle, with which you can invest from within. Obviously, with all the work UFI VocTech Trust has done over the last decade, we had a pretty good scope of what that could look like. But this year, we've been a little bit more targeted and refined our thesis to make sure it's really aligned with where we want to be making the most impact in what we do. So if I quickly run through kind of this and how some of our portfolio businesses falls into this as well. So on the left-hand side of the screen, we have our first area, which is around broad skills development and flow of talent into the areas of the economy where there are those significant skill shortages that you'll be reading around in the news all the time with the UK economic value being driven. So for example, is operating, supporting people, upskilling people from other walks of life into cybersecurity roles. So they play a vital role in solving that real big skills challenge in the cyberspace, where there are a huge amount of unfulfilled roles. Similarly, with Data Literacy Academy, they support people with becoming more data literate, and they work across all organizations, whether you have data literacy, whether they have data teams or they don't, and they upskill all people across those organizations. And how do we invest in organizations that can better enable adoption of vocational businesses that fall into this? We have areas sort of around immersive learning and VR learning, with body swaps and metaverse learning, where they build immersive experiences to promote better vocational pathways. We have SpringPod, which supports young talent with making the most educated decisions around their next step on their vocational journey. So what does an apprenticeship look like for that young person who typically, probably throughout their schooling experience, hasn't had any engagement with what an apprenticeship looks like, and Springpod plays that role in advising and making sure that they get to experience that before they make that key next decision on their journey towards a career. And the last one, which is probably it's probably the most important, is how do we reach the underserved and hard to engage communities that typically have no access to either adult learning provision or provision, and ultimately how do we use training as a vehicle for them to get better access to jobs. So we have, for example, Assemble U, which is an audio-based learning provider, which enables the millions of deskless work. We have Autonomy, which is working with neurodiverse talent to assist them into making that key step into how they can get into work and manage that process. So, super impactful parts of the market. That is the end of kind of the conversation. What we'd love to do now, if Elisaid and Helen can join me back on the screen, is take some questions. I see the questions from the chat function is relatively light, so I might take on the role as a questions master and ask a few myself to start, but please do throw some in as we go. I think one thing I'd like to ask both of you is just around, we had that slide on the data of what the market's looking like within HR tech and EdTech, with it looking like it's falling away a little bit. I'd love to hear your perspectives on what we see, how we see that maybe moving in 2024. So Helen, if I come to you first on that, what I don't want to do is us deliver this today and people go away thinking that there isn't investment from them, because I don't think that's the case. But I'd love to hear your thoughts on that as a first starter for 10.
Yeah, no, thanks, Alex. It's a really interesting slide. And I think we should really bear in mind that we're not done for 2023 yet. So whilst 2023 looks quite low, there are still fundraisings happening. So, we do expect that to look more interesting by the time all of that data is in the sort of bigger picture. Also, there are a number of businesses that are delaying their fundraisings because they want to see an improvement in valuation. They want to see more visibility, really, in where the market is heading. And valuations have come down. So if they can delay it, they are. So we anticipate that next year there will be companies coming to market that chose not to raise in 2023, but now do need to raise in 2024. It's a really exciting place to be from my perspective. That there has been, in 2021, clearly a huge boom in the market in terms of sort of fundraisings, that number has inevitably come down, but if you sort of exclude the year 2021 from the data, there is a steady sort of uptick in funds going into the EdTech sector and HR tech. And it is an area where, people are really focused on. Obviously, we're focused on the area. We are continuing to invest. We'd love to hear from companies who are fundraising. And we are seeing the sort of ecosystem becoming, building out, and there being much more a proliferation of really good quality offerings. So hugely excited and really loving to see other investors find the sector exciting for the first time as well.
Great. We have had a question come in that I'll go to next, and then we can come back to the group. So please do feel free to keep kind of throwing questions in there. We have a question around, we are a startup business unit within an established social enterprise. Would a seed investor be willing to invest in us before rollout into a separate legal entity, or would we need to set up a specific legal entity in order to get an investment? So I'll come to Helen first, and then Elisaid, get your view.
Lovely, thanks, Alex. So I guess it depends on who the investor is. If they are purely a financial investor, then they would want to see the entity probably in its own, having its own legal entity, a for-profit limited company, essentially. Unless that is that business line would will gain something from being in a larger entity. So are there, for example, customer relationships that will benefit that new line of business that the commercial financial investor sees value in? In that case, maybe they'd want the entity to stay in the bigger social enterprise, but they would want to see that profits could be distributed from that social enterprise entity. So that is a huge consideration for them. I'd say that an impact investor, or an investor that's interested in not just the commercial return, the financial return, might be willing to put money into the larger organization, despite having, maybe some this holding back the new line of business potentially, or not growing as quickly, but they might be willing to invest in the entity within the social enterprise. Alisaid.
Yeah, I think I'd echo that in saying that, as you say, the majority of investors would want it to be a separate legal entity that isn't, for example, asset locked, which some social enterprises are, and that they can scale this company and receive an exit. But I'd say that, for example, in other parts of the UK, so for example in Scotland, there are slightly differing versions of social enterprise, and there are some commercial investors up here who would happily invest in more sort of social, like Scottish social enterprises, because they're structured in a way that they can get the return out that they seek. But again, that's a slightly niche example, but I would echo that it probably is better to have a separate legal entity.
Okay, great. We've got a couple more that come in. So I think Ali has asked, many thanks for the info. For an EdTech project that is impact-oriented, operating in developing countries, what options would you think would be feasible in this climate? So, from my perspective, I'd say that there will be, we are obviously a fund that's focused on UK impact. We can invest in companies that are operating elsewhere, but there has to be a link back to the UK for us. That said, some of the other investors that were on the slide earlier in the presentation can look at more global businesses. So doing that research, making sure you're engaging with funds or investors that can kind of fund you in other parts of the world. But it is definitely a part of the challenge of developing areas and developing countries that have got.
I think I've lost Alex.
Yes, I have too.
Maybe we should jump while he gets back there. There's been some specific questions about, for example, DCMS, Create Growth Investor Partnership Program, and one or two other partnership programs which exist. I think maybe we can take that off this call just to understand a bit more about where we fund. But there are a range of other investors and UK bodies that we do invest alongside with.
Sorry, my internet seems to be playing up at the wrong opportune time. Thank you for jumping in, Alisaid. I think that's all the questions we have in the chat. I think one more I'd like to finish on, if my internet stays stable, would be, unless anyone else has any final burning ones, I think it's just Paul say thank you, would just be around kind of the excitement. And talking to Alisaid about the trends we're seeing, I'd like to ask both of you, again, as my dedicated role as a question master, what do you from a trends perspective in the VocTech market? So I'll come to you first, Alisaid, on that one, and then come to Helen.
I'm really excited about the net zero transition and the companies that create the skills for this transition, and seeing how people will get those skills as we move to a sort of very different economy. So yeah, that's really excited to see more in that space.
Helen?
Brilliant. I think there are lots of trends that we're excited about. One in particular is new universities and further education colleges. We're seeing a number of entities come to us with ideas about how to reach people who aren't currently being reached by the current system, and really bringing down the barriers to accessing that. So a really exciting area with the potential to reach many, many more users. Super. Well, thank you so much.
From my side, I'll answer my own question, is that, Sorry, thank you so much for the session. I'll wrap up. My internet's not playing ball here. We really hope you enjoyed the session. There is a link available, and the videos and slides will be made available post the call. As this has been part of our week of VocTech, we're obviously only in the first day. There are still some great events taking place across the rest of the week, so please do look out for those. Tomorrow's online session will be on succeeding into selling into the public sector, with insights from Catch-22, Resolution Foundation, and some of our other strategic partners. And the UFI VocTech showcase will be taking place on Thursday evening in London. So please do. I think Thomas will put the link in the chat, and please do register for more sessions. And thank you so much for your time. Really enjoyed the session, and we'll be following up. Thank you so much.
Thanks for joining us.